Hey, this is Sasha Evdokov, and welcome to another episode of Let's Talk Stocks, episode number 97. Now, in this episode, I'd like to share with you a very important concept, a very important action for you to be successful in trading. It's one of the more important things that you need to do in order to be successful. And it's a very simple concept, but it's very difficult to do. And that concept is proper thinking. But more importantly, it's all about thinking. Now, back when I was studying a lot of business development, a lot of personal growth, reading a lot of books, watching a lot of video courses, attending a bunch of seminars, when I was doing a lot of that growth, educational growth process in my life, I heard this concept from Brian Tracy in one of the business development courses. Now, I still read a lot of books and a lot of video courses and still continue to grow that education side, but I did a lot more of it back then. And that's really where a lot of the puzzle pieces started to fit together for me. And when I heard this concept about thinking, it started to put more and more puzzle pieces for me together. So what happens with thinking is once you have the appropriate thinking process, this allows you to have better choices. You're thinking about the better choices that are coming your way. After the choices, it allows you to do better actions. And when you have better actions, you take the actions on those steps, you have better results. Okay, so let's take a look at this. So if you go through the process of thinking properly and having the right thought process, you then go ahead and make decisions and make choices about taking action on those steps. Okay, so if I'm thinking about a certain stock, researching a stock like Apple, Home Depot, Twitter, Facebook, whatever the stock is, I start thinking about those choices, then it allows me to take better action. Okay, so from the choices, I can go in and I can create actions. And then from the actions, I can create better results. Okay, so as I'm thinking about the actions, I'm looking, okay, what are the action steps that I need to do? What are the appropriate steps that I need to go through? And then from those appropriate steps comes the results. So if I take the right actions, I can get the results. So all of this really works through a process going from thinking all the way to going and getting your results. Now, when I look at the thought process in the stock market, just like with anything else, there's two main places or two ways that you could think about something, and they are in the positive emotions or, of course, the negative emotions. So you have these two ways that you could think about something. Now, the thought process, of course, you could have positive or negative, but in the stock market, it happens differently depending on your situation, because what I want to share with you is more about what's applicable. So what happens in the markets is you have a situation where you're between these positive and negative states, you have a situation where you're either out of a position or you're in a position. Okay, so this would be your position of where you're at the moment. So you're either out of the position, so this would be like sitting on the sidelines, okay, or you're in a position, you're inside a trade. Okay, so hopefully that makes a little sense. So now what you can do is you start looking at what is your thinking process during these times. And it's important to really have the right thinking process because, as I've just explained, you go through and you start creating choices. You start making decisions. And then those choices lead to certain actions. And then those actions are the results. And these are the things that you want. This is ultimately what most people want when they're trading the stock market. They want the results, okay? But you have to go through the appropriate choices and you have to have the right actions to get to the results. So here, when you're looking at a position, when you're out of a position, there's a few thought processes that go through your mind. You'll start looking at what's moving. You'll start thinking about the conditions of the market. Okay, you might actually also look at your profit potential. How much can you make so that you could buy that next thing, or what is it that you need to save for? So you'll look at profit potential, what's moving, the conditions of the market. You'll probably start wondering, looking at stocks, and then about your time. Time meaning when you should get in, when you should purchase a certain stock. Okay, when you should execute the trade. Should you do it during the day, during the afternoon, maybe tomorrow? And then you'll go back and you'll say, okay, well, what's the market look like? What's moving? Are there other things that are moving? So this is the thought process that you look at. A lot of people look at, and this is what I used to look at a lot more so when I got into the markets, was a lot of things like this, like what's moving, the conditions, the profits, the stocks, and then the time, okay, when to get in, and so forth, because I'm sitting out. I'm sitting on the sidelines and I have this bucket full of cash ready to invest because I'm looking to take my money and, either duplicate it, quadruple it, or, just make a certain percentage on that money. So that's what I'm looking to do. And when you're sitting on the sidelines, you're starting to think about these things. Now, on the flip side, when you're in a trade, you start looking at some other things. You start looking at some other behaviors that happen within that stock because you're already in the trade. Now, in this case, you might be thinking again, how is it moving? Is your stock moving up? How much energy is there? How's the market overall? Again, the market conditions. But you also start thinking about things like, should I take my profits early? Okay, so you start looking at reduction, and then you start looking at your current profits, okay? Is your current profits enough? Then you start wondering about when's the pullback going to come or happen? And then this later gets into a little bit more risk. And then you might also think about, should you add to the position? So all these different thoughts might be running through your head throughout the position. So if you're out of the position, you have these kinds of thought process that'll go on from moving, how it's moving, the conditions, the profit of your potential, the stocks, when to get in, what type of stocks, and the time frame of that you should get in, how long you should hold it. And then when you're actually in a position, then again, you're kind of looking at similar things, but they're slightly different. Now you're watching at how things are moving because now you're tied to the stock, the energy, again, the market conditions. Is it still safe on that spectrum? Should you take some profits? Should you reduce your position? When should you take your profits and when should you maybe add to the position? Should you add on a pullback? And you'll slowly have positive and negative emotions that go in both of these. So you have positive emotions for the time that you're out and in. And again, the same thing for when you have negative emotions when you're in and also out. So for example, positive emotions when you're out, if you're not in a trade, if you're out of a trade and that stock starts selling off completely that you wanted to get in, you're going to say, oh, I did really well. I'm glad I sat out. So now you're looking for confirming your bias because you're trying to cope with the thinking process that you were correct. And then when you're in a position and if things move in your favor, again, you're saying, wow, I made a good choice. You're confirming what it is that you're in there and you have this positive emotion. Now, the inverse is true on a negative emotion spectrum. So when you're in a position and the stock goes against you, you're going to have that negative emotion because it's going against you. You made the incorrect decision or things aren't working out in your favor. And then you might have a negative emotion when you're out of a trade because maybe it's moving, but you're not in it. So you're missing out. So there's all these emotions that start playing. And there's, of course, more emotions that go along with trading. But just to share with you about the thinking process, that how complicated we make this thought process is we go through all of this and we try to make a trading decision. Now, not to mention the other things that we start adding into this is when we're sitting out, we start adding in things like moving averages. We look at volume. We look at, let's say, Bollinger Bands. You might look at, other patterns or technical analysis, support, and then you have resistance and all kinds of stuff. So you start adding in all these functions and your thinking process now has to compute all of this before you even get into a position. And it makes it very, very difficult. So for me, I like to simplify things. All right, so here's the way I look at things, and I like to make things as simple as possible. So here's the way I look at it when I'm getting into a trade and the way I think about it. So if I'm out, okay, and I'm thinking about a position, so let's just say I'm looking to set up a trade, okay, like to make this really simple. I'm out of the trades and I'm looking for a position. I'm looking to use my money to invest it to make more money. So what do I do? What do I look at? Okay, I ask myself one simple thing, and that is, what is the risk? Okay, so that is what I ask myself. What is the risk? And if you have trouble figuring this out, what you could do is do it on a spectrum. So again, I like spectrums. And you could say, okay, this over here is low risk, and this is high risk. So if, for example, you normally, let's say this is your normal or average trading size or position, you normally trade 1,000 shares, okay? And you normally trade 1,000 shares on an average position on an average stock. Let's just say you're trading 1,000 shares. And the risk is high, okay? If the risk is high, I might trade, if it's somewhere over here, okay, somewhere in the middle, I might trade 700 shares. So I'm trading lighter. If it's really high, but I still like the position, I think it might have potential, I might trade only, let's just say, 300 shares, okay? Then, if it's extremely high, I probably wouldn't even trade it, but let's just say if you really wanted to get in and if it still meets all your guidelines, you might trade 100 shares or something like that. So you trade less when the risk is high. And then if the risk is low and you normally trade 1,000 shares, let's just say that's your average, that's your kind of equilibrium, okay? So when you're looking at it and you're trading 1,000 shares, okay? Now, if the risk is a little bit lower, you might do 1,200 shares or 1,400 shares, okay? Or 1,600 shares. You don't go too wild or crazy, because what you don't want to do is be off balance between the difference of when you're getting into high trades and low trades. You kind of want those a little bit balanced. So you probably wouldn't want to exceed maybe 1,500 here and a 500 drop over here, because then your max range is minus 500 over here and then a plus 500 on this side. So you don't want to go too far in one spectrum or the other. But what you're trying to assess, and my question to me always when I'm thinking, and it just makes things a lot simpler, is if I'm not in the trade, I just simply ask myself, what's the risk? And if I can do a risk to reward ratio of something 3-to-1, where my win rate to the risk, okay? So for example, if a stock is moving and I project it, and let's just say it's A to B to C to D pattern, okay, just a basic pattern. If I project it to do the C to D and it's 3 times larger than the risk, which is over here 1, okay, then that's worth it. If it's more of a 4-to-1 or a 5-to-1 or a 6-to-1, then I think of it even better, because now I say, okay, then the risk is a little bit lower or the reward is a little higher, so then I have a little more potential, and then I might load a little more shares on there. But again, you have to assess this thing, and my thinking process is always, what is the risk? Now this, of course, is after I've done the technical analysis, after I've done and looked at the company, after I've evaluated the charts. Now my only thinking is, what's the risk? What's the risk? And that's always in my mind. I used to think about, okay, what's my profit potential? Then I used to think about, okay, well, how are the moving averages going? How is this going? But once I find myself already kind of attached to a certain stock, you already kind of decided that you're going to invest in it. And you have to slowly be aware of yourself when you get into that point. It's kind of like when you start researching about a phone and you start saying, oh, I like this phone, or I like this device or this gadget. You start researching it, then you read reviews about it, and then you slowly get confirmation bias where it reassures you that that's the right purchase. And then eventually you get it. So already in my mind, by the time I'm looking at that stock for a few moments, really I make the decision probably within a couple of minutes, within a minute or two. After I'm already looking at the stock chart, looking and evaluating it, because I already know how they move, react, behave, Now I'm just looking, what's the risk? What's the risk? And that's my biggest question. And that's all I'm thinking about. And if that passes my test, then I might get into the trade right there. So now I'm in the trade. Now, when you're in the trade, what is it that I'm thinking about? What is my thought process? Now, you know and understand that you'll probably have some positions, they'll pull back a little bit. Sometimes they don't work in your favor and you have that positive, negative emotions. Sometimes it goes up and you got positive emotions. Sometimes they go down, you get negative emotions. So what am I thinking about once I'm in the trade? And again, I ask myself really one main question. And this is what I'm always thinking about. It just keeps things simple. That way, my brain doesn't do this ping pong factor or ping pong thing, like pong goes back and forth and back. You ever have those thoughts where you have one thought, the butterfly effect, and then the one thought leads to the next thought, then you lead to another thought, another thought. It's kind of like daydreaming, but it just continues to go in circles. And really, in the end, it kind of creates this tornado effect where you start thinking about negative thoughts. And that's really what I try to avoid. So in here, when I'm in the trade, I'm always asking myself, there's one question, and I think, is the position healthy? Okay, so that is pretty much the only thing that I think about. This allows me to keep my sanity because once I'm in the position, I'm going to get these positive emotions. I'm going to get some negative emotions. Sometimes that account value, let's just say you had a $10,000 account value, sometimes that drops to $9,900. And now you're still in the position, but you got to ask yourself, is the position healthy? Otherwise, if you think about this money that's in your account, the net liquidation value, you're going to drive yourself insane. Your thinking process is going to make you think about the choices. Okay, you're going to think, you're going to think and wonder, okay, well, what if it goes against me? What if it doesn't work? What if I lose this money? And then it's going to lead you to worry. And once you worry, you're going to create this action that you want to get out of it early. And when you get out of it early, your results are going to suffer. So now you take this account dive minus, let's say, $100, and then that stock moves back up, and now all of a sudden you have this other emotion of chasing it because you missed out. So that's the thing. I always ask myself, is the position healthy? Now with this, I look at a few factors. I look at how it's moving, okay? And of course, the action of the price and how the stock is behaving. So it basically comes down to how it's, BAM, B-A-M. The behavior, the action, and how things are moving. And all this comes from price and volume. If the price is moving in a nice price spread, so you have a price spread that's, large rather than a price spread that's small, that to me is good behavior. If you have a small price spread, it's kind of weaker behavior. And then if you have volume coming in with it, that's also great. If you have light volume coming in, that's not as good. So I'm watching these things and how those things evolve. But my main key, the question I ask myself, is the position healthy? And that's when I'm in the position. If I'm out of the position, I look at what is my risk? What is the risk that's involved in putting on a trade? Because the act of trading, most of the time that you spend in trading is thinking. It's all about thinking. You're thinking about moving averages. You're thinking about the charts. You're studying, you're researching. It all comes down to thinking, analyzing, and then evaluating. Okay, so then you make the choices, do the actions, and you get the results. But it all starts with that thinking process. The rest of the time when I'm actually in the trade or when I'm out of the trade, I actually have a bunch of free time. I have a lot of free time that I could spend my time doing other things, because once you're in the trade, you're just letting your money sit and either grow or let options deteriorate, or if you're shorting something, you're allowing it to sink. You're being patient. So being patient is one of those factors. And sometimes if you're sitting in a trade for, let's say, 3 weeks at a time, then what do you do with the rest of that time? You're thinking about the next trade when you're the next one that's coming out, or you're thinking about when you're in that trade, if that position is healthy. But really, the actions that you're doing are minimal. So that allows you to have some free time. And for me, it's one of the reasons why I have an opportunity to do videos and educational lessons like this one or write books, is because your money is simply sitting there in these positions. Or you're out of the positions, you're doing your research, and then potentially you're waiting and being patient to allow those charts to set up. But the act of trading, to put on a trade, really just takes 2 to 3 seconds. The rest of the time is that thinking process. So if you have yourself and you find yourself spinning around in this tornado factor, going in the butterfly effect, thinking from one thing to the next, to the third thing, to the fourth thing, you're constantly, wondering about your decision, simplify it. You may not use exactly what it is that I think about. It's up to you. If you want to use it, by all means, use it. But for you, if there's a better solution that you could think about, just one thing or one simple thing, then focus on that, because the rest of it is going to drive you insane. You're going to contradict yourself. You're going to wonder. You're going to be positive emotions one time, then you'll be negative. You're going to feel upset, then you're going to feel really happy. Think about one thing, one main focus, and ask yourself kind of more of a logical question that you can answer in a way mathematically. So what is the risk? For me, is more of a mathematical kind of question. So it's a 3-to-1 risk to reward ratio, or is it a high risk, medium risk, low risk? So again, I can define that risk. You have to define that risk. That's the way I do it, is I'm looking at the risk. Where is it healthy? Where is it not? And then once you're in the trade, the position. Is the position healthy? If you're in the trade, it's moving, acting, behaving, bam. If it's acting the appropriate way, then you're in a healthy position. Then stop worrying about this $100 pullback, or even if it goes $500 pullback. If it does $500 pullback and it starts to make you worry, but everything else is fine, then you're not thinking about the right things. You're worried about your loss. You're thinking about your loss, which eventually creates new decisions, then new actions. You get out early, and that suffers your account and creates negative results. So find what works for you and simplify it about when you're in the trade and when you're out of the trade for your thinking process. Because what you don't want to happen is have that butterfly effect where it's just constantly all over the place. You're worried, you're wondering, Sasha, what do you think of this stock? What do you think about that stock? Where's the support? Where's the resistance? If you're emailing me about a trade, then you're not thinking properly. Then you haven't created a plan. Then you haven't set up your strategy. And that's typically where people struggle, is because that thinking process, they haven't set up the right things in place to focus on the appropriate things. So thanks for joining me in this video. I hope you found the lesson helpful. And if you're interested to see other training lessons like this one, go ahead, sign up to my newsletter list by clicking this button right here. When you click it, you'll be sent to a page. Enter your name and email address on that page, and you'll be notified as new training things are released. Now, sometimes I also do book giveaways. When I launch or release new books, so be sure to get on the newsletter so you can get some additional free training. Thanks again, and remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.